Over the past month or so in July, the stock market has been on an absolute tear, and now it is currently August 1st, and I just want to give you guys an update on what's going on. So, in very recent news, before the August 1st deadline, Trump announced that he will be extending Mexico's tariff delay for another 90 days. And this is interesting because Mexico is one of our most important trading partners, and for him to put a tariff delay right before August 1st is very crazy news. Talking more about tariffs, today was the day in which we saw a great pullback on the stock market with these new tariffs that went live at midnight. Whether that be Switzerland or Canada or Thailand or Venezuela, Trump is just kind of going all out on all these countries to essentially make an agreement with them. Amazon got hit pretty hard today, falling about 8%. And this was largely due to the tariffs because, I mean, it is e commerce. It is such a huge business relying on so many countries. And this new tariff, I mean, it was expected, right? We all remember what happened in April. The market absolutely crashed. The S&P 500 fell like 10%, I believe it was. And with its quick recovery, I mean, this was one of the fastest recoveries I've ever seen in the markets. And I just want to see how the Amazon stock reacts in the next couple weeks. Regarding the probability percentage of the Federal Reserve cutting interest rates, that percentile fell from 63 down to 45. It went actually down to 52, but then it went even farther down to 45. This was largely due to Powell not really giving any meaningful commitment on the path to a September cut. He also says the labor market is strong and inflation is sticky, so we're all assuming here that he does not want to cut. He's not very excited about that. So what you are looking at right here is Figma. They had their initial public offering yesterday, and in only 1 hour, I believe, it went up around 200% from its original price per share of $33. So it is Adobe's biggest competitor. They offered $20 billion to buy them out, but they said no, and so they IPO'd, and biggest IPO talk of the year aside from Circle. So to the people who got in at the bottom and who got their orders filled, congratulations. And I urge you to take profits. I also want to talk about Palantir. It is by far the most unicorn business right now. I mean, they are so expensive. They are sitting at somewhere around, I believe it's a 600 price to earnings ratio. So by no means is this an incredible buy right now. But I do want to bring this up. Loop Capital lifted Palantir price target from I believe it was 155 up to 178, and that is an extremely high price target, especially for where the company's sitting right now. I mean, this new cloud computing, and it's just such a revolution, and their momentum, I believe, as well as Loop Capital believes, will continue. United Health is an interesting stock that I'd like to bring up. This is a stock that has not been performing. As we can see, it's down 60% this year, in the past year. So you need to have a lot of conviction when investing in this because they are currently under investigation. And so with all this bad news going on, they are losing a lot of their value. But many people are saying that it is a good buy, to which I honestly agree. This is a very attractive price, especially with how high it's been. It's fallen back right down to that 300 mark, if a lot less than 300 actually. But if I were to get in at any price, it would be right now. To the people who are keeping up with SoFi, their stock is very interesting because it has been on an absolute run in the past month or so. And you could see after their earnings were reported, they had an insanely profitable quarter. I believe it jumped about something around $7 and around 8%. And but immediately after that, SoFi announced a 1.5 billion mixed shelf offering after the bell. What does this mean? Basically, they reserve the right to offer $1.5 billion of stock, which at $21 per share would be 71 million shares in the open market. The higher the price of the stock when they dilute, less shares that shareholders get diluted by. I know Noto said that he wants, he wants a strategy for an acquisition because they want to enhance their crypto offerings, which could be really good for the company because crypto is just such an insane demand right now, especially with all these new generation investors and retail getting involved. It's hard to imagine they'd be buying Bitcoin or Ethereum, but overall, the quarter was really strong. And this doesn't change anything, but it'll likely annoy some shareholders. I am currently not in it right now because of just the quite high valuation. I mean, if I can get in under $20, I probably would. But if you are long term, then and you believe and trust that this management will use the 1.5 billion to acquire a company that is of actual value and will, make the shareholders happy, then I truly believe that this is a good investment for you. Robinhood is another stock that I'm just so excited about. I've already made a video on it, but JP Morgan Securities increased their price target to $130, which, I mean, currently it sits at $99. It fell, I believe, somewhere around 8% today at one point. I actually saw the dip right when the market opened, and I thankfully got in somewhere around $94. So I was pretty excited about that, but it immediately corrected itself right back up to that $100 mark where it was in the beginning, because it's just doing so well. It's their user interface is great. They have 27 million current users and growing, and it's just such a insane company. Quarter by quarter they're growing. Robinhood managed to put almost $1 billion in revenue again, and they beat earnings per share by 35%. So every dollar of revenue Hood brings in, 42 cents is pure profit. And they have been using that profit to buy back shares um, and grow the top line business at 45%. These metrics that I'm just telling you right now are insane. And obviously, you've seen Robinhood up somewhere around 300% in recent months. So obviously, you'd think that it'd be an expensive stock to buy, to which it might be. But in terms of like their growth, it still has the legs to go way higher. Two more companies I'd like to talk about would be Microsoft and Meta. And both of these companies did extremely well after earnings. We saw Meta going up somewhere around 8% on the day after earnings were reported. There's been a bit of a correction since, but that's just a good example. Same with Microsoft. They did very well as well. And keep in mind, these are two of the biggest market cap companies. They moved $400 billion after hours. They're multi-trillion dollar companies. And even with all this great performance, we saw red in the QQQ on the same day, which didn't quite make a lot of sense. So I'm starting to get the feeling that the market really does want a correction. Uh, there's only so much higher that the markets can go before we have an adjustment. And that doesn't just involve Meta or QQQ or Microsoft. This involves everything, AI and tech as a whole. Um, Everything's just moving so fast, and so much money's being moved into these stocks, and it's just inevitable that a correction is coming.